How's it, guys? Welcome back to FX Rhapsody. Today we're looking at two currency pairs. We're going to be focusing on the USDJPY and then also the Euro USD dollar. Before we hit the charts, let's take a visit my website. It's on the bottom left corner over here. The link will also be in the description. You can find some previous analysis, some brilliant strategies that I've made videos on. And then also preferred brokers, guys. Go visit my preferred brokers tab, or the brokers tab, where you will find the brokers I use when I trade. You always, when it comes to trading, you always need somebody reliable on your side. And to have a reliable broker, guys, that's looking after your interests when it comes to trading. And these guys are absolutely brilliant. Okay, so let us hit the charts. We're going to be focusing on the USDJPY first. We're doing daily analysis, moving down to the 1 hour time frame. So what we're going to look at is daily first. We see that, USDJPY eventually made a nice little movement to the downside. If you take your Fibonacci from the swing low over here, so you take it from that little over that wick. Now you could have had a swing high over here. Okay, I'm just putting my mouse cursor over there. Price not retracing all the way. Another swing high over there, price not retracing completely, just carrying on up a bit, and then I will be putting my mouse cursor on that. So you have a swing low and you have a swing high, and now eventually you can see price moving down and eventually touching that 62% area that we always look at. So will this be an area that we're going to be looking for buy signals? But yeah, time will tell. We will definitely have to drill down to our low time frames to see what's happening there. On a 4-hour time frame, not a lot to talk about on this time frame. Just previous liquidity. When it comes to price action, and if you are a price action trader, you will always understand that price hunts liquidity. Okay, so that's liquidity that's been taken out. So that's our previous low. Price just hitting that or tapping into that liquidity and breaking through it completely. And if we zoom out a little bit, we can also see some more liquidity being taken out on that another previous low that was there. So you can see price just moving downwards all the way. So where is price going to turn? Again, when it comes to trading, I always say react to what the market gives you. Do not just predict it. It's easy to give you predictions, and most of the times, especially guys giving predictions on market, most of the times it doesn't work out. So I always say just react to what the market gives you. So on the hourly time frame, we can see, talking about reaction of market, every time at the end of my analysis, I have a little area in the market that I highlight, and that's basically where the beginning of the week is going to start. So we have obviously a little gap. We talked about this gap. I made a little video about it called Trading the Gap. For those of you that hasn't watched it yet, go search it on my website. It's my previous, or on my YouTube channel. It's one of my previous videos. In any case, so we have a little gap that was formed. So price just moving up and then eventually closing that gap. But again, we had a high that we were looking at and we had a low. Okay, so we saw price going up. Now, why did price turn on, over here and then carry on downwards? Simple explanation is fair value gap. We always talk about the fair value gap, and it's either going to be fair value gap or Fibonacci retracement. So I'm going to show you two. So I'm going to show you the fair value gap first. This is the reason price moved up, because it had to fill that gap that it created over there. So you had a fair value gap that was created, price moving up into that fair value gap, and then it started moving downwards. And then another one, if you had to miss that entry, I'm just going to zoom out a little bit. So you had after that fair value gap was hit, price started moving downwards. So that is creating a high in the market. So that was a high, and now we're looking for a previous low, or we're looking for a low for some type of retracement. So we take out a Fibonacci. So let's say you missed that opportunity, we take out a Fibonacci. So let's take out on the first one. So we had a high, we had a swing low, retracement, not all the way to the 62%. Okay. So what happens when that happens, when there's no retracement all the way to 62%, I just carry on with my low. Okay. I keep my high as it is, right? My high will be there, and then I will find another low. So price carrying on downwards and eventually creating another low over here with that candle over there, the green candle. And as you can see, price again started retracing upwards. So if we pull our Fibonacci to the side, we can see how price nicely tapped into that 62% area right about there, and that is where price started moving down, and it started melting all the way down to the downside. So that is two ways that you can take, or you could have taken trades on the USDJPY this past week. Now what we are looking for this coming week, obviously, like I said, on the daily time frame, we saw that tap into that 62%. So will we see some type of retracement or some type of move to the upside? So we're definitely going to be looking at this low that we're going to be focusing on. Let me just I like to have my lines nice and straight. So I'm going to be looking at that low, and then I will also be focusing on this high over here. Okay, that's going to be my, come on, there we go. So that's going to be my high that I'm going to be focusing on this week, right? So a lot of people ask me why this is going to be a high, because that's a structure in the market, because you have all these bearish candles in the market, you have one bullish candle in between, formed a little structure. So that is going to be my high, the tip of that candle, the tip of that wick, basically, that is going to be my high that I'm going to be focusing on, and that is my low. So any movement outside of these two lines, be it a fair value gap that is going to be forming or a retracement on the Fibonacci, I will react to what the market gives me, and I will trade accordingly. Okay, do not just predict the markets. Use the higher time frames to see the bigger picture. Okay, I'm not using the higher time frames to tell you this is where price is going, this is what's going to happen, and all that kind of things. I'm showing you higher time frames moving down to the lower time frames just to show you the bigger picture of all. That is how price is moving. Okay, I'm not predicting anything. I'm just looking. You cannot just read a book, one page of the book, and know the story. You need to read all the pages. So that is what's happening. Let's move on to the next currency pair. We're going to be looking at the EURUSD. Okay, EURUSD, we're obviously going to start off on a daily time frame. Okay, daily time frame, you know, not a lot happening on the EURUSD, but I'm going to show you something interesting now. It is definitely going to be on a lower time frame, so I'm going to show you this. But high time frames, obviously that high that was taking out. Okay, so we had a high, price going up, tapping into that area again, and then eventually breaking that. All right, so the liquidity is being hunted. So you can see this high being taken out as well in the market. So you always have these areas in the market, just, you know, not necessarily highlighted on your charts. You don't want your charts to be too messy. What you want is just to have a mental note of these areas in the market, or you can highlight it and just make it visible on the daily time frame and not have it visible on the lower time frames. So when it comes down to the low time frames, you don't have all these, you know, lines and whatever you have on your chart. So make it visible on one single time frame, on a daily or on a 4 hourly or on a 1 hourly, right? It's just a little tip for you guys. So you can see liquidity being hunted there. I'm not going to go to the 4 hourly time frame because nothing, you know, really happens. It's just we're looking at that liquidity that's been tapped into. So I'm going to go to the 1 hour time frame because I want to also just show you something on the 15 minutes. 1 hour time frame, again, you know, we saw this gap in the market. These gaps usually, because I had a comment in the comment and one of my comments asking, you know, when does these gaps occur? These gaps usually occur when it's going to be two things. It's either a big news event or it's going to be over a weekend. Okay, this is obviously over a weekend when this gap occurs. So normally what happens is, normally what happens is that that gap gets filled. So a gap occurs or a gap presents itself and you trade according to the gap and it fills itself. So that is the gap that happened. Now with that gap, we also had a fair value gap in the market. So that broke when that price broke that area that I was looking at, that I was highlighting, that high. It created a fair value gap in the market, right? Price hitting that fair value gap and started moving upwards, but it kind of kept retracing back to this fair value gap, and eventually price coming down. So I'm just going to zoom out a little bit, and as you can see, price coming deeper into that fair value gap area, breaking just a little bit below it, and then shot up. Okay, but this is the 1 hour time frame. Okay, so this is what it looks like on the 1 hour time frame. You can see that price, it looks like price broke just below that fair value gap area. Now let us move on to the 15 minutes, and I want to show you something. That is not the 30, the 15. That is why I always say I love trading on the 15-minute time frame. It is such a nice time frame just to, you know, to place my entries and all that. So on a 15-minute time frame, okay, this is what happened. So we see this gap in the market. So price going, trading up into the gap, right? So if you saw this gap and if you traded it, you would have placed a buy somewhere over here, and you would have, you know, waited until price went, you know, and filled that gap. So nice little buy opportunity. Then you saw price breaking this area, okay, and retracing back to this area that I highlighted in the market. Then what we see here is a little gap in the market, in the price, and that's a fair value gap that was created. Now we saw the fair value gap on the 1 hour. Now the 1 hour and the 15 minutes is obviously a couple of candles that fills that 1 hour candle. Now as you can see, this was the first gap that was formed. So if you take that first gap, okay, so price started moving upwards, right? So it moved up and up and up and up and up. So as we follow price going up, then we saw it hitting a point in the market. I'm not gonna, you can go, you know, by yourself, go look left why it hit that point, but it hit a certain area in the market, and then it started reversing again. So how could you have caught any movement downwards or upwards or whatever the situation? Because now remember that I have talked about, I think it was in my previous video, that fair value gaps always get filled. Okay, it's just a matter of time. So let's have a look here. So we had an area in the market that price went up, and then it retraced a bit, or then it started turning in the market, okay? Be it a double top or whatever you call it, okay? Or whatever the situation, but then price started moving downwards and then retracing. So then you take out your Fibonacci, you do that, okay? Swing high, swing low. This is 15 minutes, guys. So that is, you're waiting for any retracement on the 62% area. So as you can see, price just kept on hitting that 62% area. Okay, I'm just going to highlight it for you. So that's the area that we're focusing on. So as you can see, price just hitting that area, you know, multiple times, not breaking above it. All right. So if you were in the sell in the beginning, you know, obviously you would have been a little bit nervous because price kept coming back into it, but don't always be nervous about it. Just have your stop losses or your risk in place, and then eventually you will see price moving down. So then eventually price started moving downwards. Now where's your take profit? Your take profit is this fair value gap or the target in that area. And look at that, bam, again, once again, hitting that fair value gap perfectly. All right. So please, guys, I need you guys to really practice and try and see these gaps in the market, because I'm not making this up. Okay, this is obviously not something that I've just drawn out or whatever. You can see it happening perfectly right there. There's a gap in the market, price going up, you know, and eventually you could have taken a nice little sell over here using your Fibonacci tool, and then price going down. That's your gap, or that's your target area, and also another entry area, because now you're waiting for some type of retracement back to that fair value gap, and that is where you enter your buy. And look at that, price hitting that area and then shot up. Okay, so that is just, you know, that is just how it works. So what we're looking at obviously now is, you know, we're going to be focusing on, I'm just zooming out a little bit. Let me just take all of this out, and this is now on the 15 minutes. So I'm going to be focusing on, you know, this is like a little bit of a worm going up, you know, movement is going up. So I'm just going to have a nice big area over here. So I'm going to have this high, obviously. Any movement above that area, I'm going to be looking at trading, and anything below if I just look at this, I'm just going to have it there. There we go. Anything below that area. Okay. That's the two areas I'm going to be focusing on. So movement above it or below it, I'll be trading it, and let's see what happens. So guys, that's all from my side. I hope you enjoyed this analysis. A little bit of a longer video than normal, but I thought, let me just, try and explain a little bit more. But if you did enjoy this analysis, don't forget to hit that like button, hit that subscribe button, hit the notification bell. Show me some love by hitting that super thanks button. And guys, I will definitely be seeing you this week coming. There will definitely be more trading videos coming your way. So guys, I hope you've been having a fabulous weekend. Stay safe and happy trading, guys.